things at the same time. Let's see if we have additional information. We are now told that capital allowance on the building, that's the building that they rented, they built for rentage, was agreed with FIRS at with the Federal Inland Revenue Services, and it was agreed at 840,000 naira. Okay, so this the capital allowance that was given to him on that building, and it's 840,000 naira. Now, the capital allowance here, it's we're assuming that this particular, sorry, the capital allowance agreed here by the State Internal Revenue Service, is at 840,000 naira. State Internal Revenue Service is at 840,000 naira. So we've seen the capital allowance. Now, this capital allowance is coming because he has business income apart from his employment income. So take note of this. Now, based on the terms of the loan agreement, don't forget that this man obtained a loan to build. Chief Rotimi Eze pays 600,000 naira monthly, out of which 500,000 naira is for repayment of the principal and 100,000 naira and as interest on that loan. So interest on that loan is also tax deductible expenses, because the loan is just for the building. So you can claim a deduction from the interest on the loan you obtained for the building for business purposes. So we've gotten the income, we know the capital allowance on the building, we know the expenses on the building, and we know the interest is paying on the building. So this is one kind of income that this man has, apart from his employment income. I've shown you his unearned income, which is from property. Let's see if he has any other income apart from the building income and the employment income. We are now told that he received dividend gross as at follows. Now, this is the gross dividend he received. He received this gross dividend of this particular amount. Now, the gross dividend on 1st of June 2017 is 600,000. The gross dividend on 30th of November 2017 is 650,000. Then the gross dividend on 31st of May 2018 is 720,000, and 31st of October 2018, 780,000. So this is another unearned income for him. Maybe he has investment somewhere, so he has dividend income coming from there. Okay, and we have we take note of that in calculating his in his total income. Okay, we are going to take note of that. Let's see additional information from Chief Eze. So we are told that he has a life assurance policy, for 7,800,000 naira, on which he pays 710,000 naira annually as premium. He pays this annually as premium. In 2018, his employer remitted on his behalf the following mandatory deduction: contribution to National Housing Fund, 1.2 million. Don't forget that this is 2.5 of your basic salary. Contribution to National Health Insurance Fund, 7.2 million. This is like 5% of from the employee perspective, this is mainly 5% of your basic salary. Contribution to pension scheme, 4,801,600 naira. This is 8% of your BTH, basic housing and transport. So this was remitted on his behalf, by his employers. Okay. Now we are told that Chief Rotimi is happily married with 6 children, all of school age. His widowed mother lives with him, and he spends 1.2 million per annum to maintain her. So basically, if you have children, before the consolidated relief allowance, you can claim dependent relative allowance. Okay, so but of course we have the CRA, which is the consolidated relief allowance, that have kind of made it easier for you to compute your tax liability. Required: compute the income tax payable by Chief Rotimi Eze for the relevant assessment year. So we want to look at the income tax payable by Chief Rotimi Eze for the relevant assessment year. So who can tell us the relevant assessment year based on what I've read, and who can tell us the nature of the income, the types of income that Chief Rotimi Eze has? So question time. Before I give the solution, let me call names. Are we there?
We are here.
Oh, thank you. So I know you came in quite late, a bit late, but can you tell me the nature of the income of Chief Rotimi Eze, types of income, or the relevant year of assessment for this case study?
The relevant years you said.
Yes, the relevant year of assessment.
2018.
Yes, 2018. So that's the relevant year of assessment because the man lost his job in a particular year, and that year, I'm sure that no income and there's no tax. He lost his job 1st of June 2017, but he was gainfully when he was employed. Definitely, we told him. Payee must have been deducted, in 2017. But we have full information from 2nd of January 2018 to the end of January 2018, and in personal income tax, the relevant year of assessment is actual year basis. Okay, it's actual year basis. So the year we are looking at here is 2018. So the relevant year of assessment is 2018. However, if we are doing companies income tax, in companies income tax, the basis of assessment is preceding year basis. So if I'm looking at 2018 period, my year of assessment will be 2019. Okay, so but now we are looking at personal income tax, so it's actual year basis. So madam, you are right with your response. 2018, that's number one. Now number two question is, who can tell me the types of income, the two types of income earned by Chief Rotimi Eze? Who can tell me the two types of income earned by Chief Rotimi Eze? The two types of income earned by Chief Rotimi Eze. I want to be sure you are with me. Mr. Shegun.
End income.
Okay,
Sorry.
go ahead.
End income and unearned income. How come, right?
Okay, who is speaking? Is this Madam Shola?
Habiba.
Okay, yeah, go ahead.
End income
Okay, end income
and unearned income.
and unearned income. Okay, thank you, madam. Thank you for your contribution. Okay, now I want to ask Mr. Shegun. Mr. Shegun, can you tell us what the end income of Chief Rotimi Eze, or can you tell us the unearned income of Chief Rotimi Eze has one earned income and two unearned income. So, Mr. Shegun, can you tell us? I'll be calling names now. This is an academy.
Yes. Can you hear me?
Yes, sir. I can hear you, sir.
Okay. The earned income is from employment.
Okay.
The one is secured on January 2nd, 2018. And the unearned income is from the rent and from the dividend.
Okay. Thank you very much, sir. So I can go ahead. So basically, we'll be looking at the solution. I'll explain this. We'll be looking at the solution of this case study together, and we'll be looking at that together. Okay. Now, this is computation of the income tax liability for 2018 year of assessment. Don't forget that we've gotten the year of assessment here, which is 2018 year of assessment. And this computation is, 2018, there's no Finance Act of 2020. So they basically you could notice that I won't apply Finance Act here. But I'll also do this calculation with you, whereby I'll apply the Finance Act. I'll now show you the difference in tax that this man will have to pay. Then you have your assignments based on what you've downloaded from our website. So try your hand on the two scenarios to see the difference. Okay, now for this, we have you could see the basic salary from the end income. The basic salary is given at 48 million from what you've read in the question. And the end income he had was the housing allowance. The housing allowance 5 million, and the transport allowance 4.8 million, utility allowance 1.2 million, meal allowance 600,000,